Hey everyone, today we're diving into something really important for retirees because once you enter retirement, you become the number one target for special investment offers. Investments that promise high income, high return, low volatility, and exclusive access to opportunities that you supposedly can't get anywhere else. And I want you to make sure you stick around because at the end of this video, I'll share a bonus section with some income ideas that can help you in retirement that may involve less risk and keep your money more accessible. Again, purely for educational purposes. And as always, nothing in this video is advice. I'm not recommending that you buy or sell anything. Everyone's situation is different, so be sure to talk with a qualified financial professional before making decisions about your investments. And lastly, before we jump in, if you like learning about retirement, investing, or investment basics, and making confident decisions that support your lifestyle for decades to come, make sure to like this video and subscribe to the channel. All right, so let's get into it. There's something called the marketing machine aimed at you, retirees. Once you retire, financial investment product marketers view you as the perfect customers. Why? Because retirees often have 1, a pool of savings that need to last, 2, desire for steady and predictable income, and 3, a fear of big market drops wiping out wealth. Salespeople know this. Marketing teams know this. And they're incredibly good at making risk sound like opportunity. Sometimes the things being sold are real, legitimate investments, but they might come with risks or limitations that don't get talked about nearly enough, especially around liquidity. And liquidity just means how easily can I get my money out when I want it? So let's look at 3 investment types that often get pitched to retirees that we often see that we actually have to try to help a lot of people unwind and why they may not always be what they seem. Number 1, private real estate investment trusts. These are the high yield real estate play. They're very attractive that way. They're non-traded real estate investment trusts or REITs. And they're often marketed like this. They have 7, 10, maybe even 15% a year of return or income. They have low volatility because they're not tied to the stock market. And they're real assets, right? Real assets you can trust. You can see, you could go look or drive to potentially. And real estate can absolutely be a valuable and diversified investment. But with private real estate investment trusts, here are the things people don't always hear. Number 1, they can be extremely hard to get out of. Withdrawals can be suspended, redemption windows can close. And if you don't know what that means, a redemption window, that's where they open it up where you can withdraw a certain amount of money. Sometimes they're quarterly, sometimes they're annually, and sometimes they only allow a certain percentage of the entire fund to be redeemed. So you might hear, sorry, funds are locked up for now. And another thing you might hear is that these are stable value type investments, meaning they don't fluctuate with the market. Now, these stable values may be based on estimates, not market prices. If there's no daily trading, values are determined internally. Supposedly they get a third-party evaluation, and sometimes they can make everything look smooth. And even when things are not doing so well, they might be potentially propped up like they're a lot better than they are. And that's where you can get into a little bit of trouble. And number 3, high income often comes with high costs. Often these things have fees and commissions that can quietly eat into your returns. So yes, income can be attractive, but the trade-off is often access to your own money. So why do retirees get drawn in? Well, 1, it feels safe. It feels reliable. And who wouldn't want a monthly check in retirement? The key is simply recognizing the liquidity trade-off. The second investment I want to talk about are MLPs, or Master Limited Partnerships. They are mostly around energy infrastructure. And the Master Limited Partnership, or MLPs, are typically tied to pipelines and natural resource infrastructure. And the pitch sounds compelling, such as people always need energy, so it's always going to produce income, right? Or it's high and steady income, and there are potentially tax advantages. But here's what can surprise people. First, Not all distributions are true income. Some of it can be your own money coming back to you. Tax advantage return of capital. So it's really not like the return, it's just your own premium, the money that you put into it is just coming back to you. That's why it's not taxable. Second, the energy sector can be volatile. Regulations, prices, interest rates, they could just shut down the oil rig, right, and not produce any oil, which means there's no dividend or income coming to you. And all that can impact value and cash flow. Third, taxes can get really complicated. If you love receiving a K-1, great. I'll tell you this much, most retirees don't, or most people don't. Usually your CPA or tax advisor will charge you more for each K-1. So again, these things are attractive based on income or the potential return, but also there's a lot more risk and complexity to them. The third is private equity and exclusive opportunities. I see a lot of people taking advantage of these just because they seem really attractive and they like the idea or they like the concept. Now, this category has exploded recently. Private equity and alternative investments marketed to everyday retirees. They look fancy. They have nice high-end brochures, big promises like exclusive access or institutional level strategies, double-digit returns achieved by ultra-wealthy. What's not highlighted so often is that these may require money to stay locked up for many, many years, 7, 10, sometimes even more. They say, oh, we expect a liquidation at the end of 7 years, or we're going to sell in 7 years. How often does that actually happen? Now, performance can vary widely. Some do great, some don't. And the fees can stack up. Management fees, performance fees, it adds up fast. So the truth is, more complex often means more risk and less flexibility. So why do retirees get drawn in? Well, one, it hits the emotions, right? The desire to feel special, the appeal of being part of something big. Maybe you like the concept or the idea. I saw one where they're supposedly going to cure Alzheimer's. So you should invest in that. They have the cure for Alzheimer's. Well, who knows when that will get approved, right? There's fear of missing out. A pitch that promises income without the stock market's roller coaster. Nothing wrong with waiting and wanting great results, but just make sure the reality matches the promise. Now here's the common theme. Liquidity. In every example we just talked about, private real estate investment trusts, MLPs, private equities, and alts, or alternative investments, there's a simple pattern. Easy to get into, hard to get out of. But life happens. Health needs change. Plans change. Markets change. Retirement income strategies should be flexible enough to change with you. Just recently, one of my clients called me. They wanted to help out their grandson. Their grandson unfortunately lost their hand to a firework, backfiring. And so they wanted to get a prosthetic and they wanted to be able to help out their family. It wasn't cheap. So they had to be able to have those funds liquid to be able to do that. Luckily, we did. But if they didn't have the liquidity, they might not have been able to help out their family. This isn't saying that you need to avoid these investments. There are absolutely investors who fully understand the trade-offs, can afford the liquidity, and make informed decisions to include them in a broader plan. This video is simply about making sure you know the potential risks, especially the ones buried in the fine print. Before investing, ask yourself, if I needed this money in a year, could I get it? Are returns projected or are they guaranteed? What are the fees? Who gets paid? And how much? How does a downturn affect withdrawals? And do I truly understand how it works? If any of these answers feel fuzzy, slow down, ask more questions. Now, your retirement savings represent decades of hard work. This isn't just numbers. This is your lifestyle. You deserve stability, flexibility, and peace of mind. Sometimes the financial solutions that sound boring are the very ones that help people sleep best at night. Now, I want to give you a quick bonus before we end this video. I want to give you some income ideas that may involve a little bit less risk and a little bit more traditional. So, as promised, here are a few categories of investments retirees sometimes use for income that may involve less risk and may allow easier access to funds. Now again, this is Not a recommendation, this is just education, but one of my favorites is dividend paying funds or ETFs, meaning exchange traded funds. You have simple, transparent, liquid. Dividends can change, but you always have the ability to sell out of those funds. Another thing you can do is set up a bond strategy or a bond ladder. Get predictable income with bonds maturing on schedule so money periodically returns to you. Or at least if you need the access to the funds, you can sell those bonds. You could look at treasuries and CDs. Now, these are a lot less risky, but they do provide some guaranteed payoff schedules and they offer that liquidity with the planning. You could still do real estate investment trusts. You can look at publicly traded real estate investment trusts. You can get that real estate exposure, but with the flexibility to buy or sell any trading day. So they're just traded on the public market. Lastly, we want to make sure that you have a balanced strategy, combining growth, income, and liquidity, not putting everything on the shoulders of one investment category. That way there's no urgency, no exclusivity, just structure and planning. So my final thoughts are, if you come across something offering high income, low volatility, no stock market risk, and full liquidity, that's like seeing a unicorn driving a Ferrari. Ask questions, do your research, and get guidance from a financial professional who understands you, your goals, your timeline, your risk tolerance, not just trying to sell a product. The best investment is the one that supports the life you want to live. If you found this helpful, please like this video, subscribe, and share with someone else who's planning for retirement. It truly helps the channel and supports more educational content like this. Thanks so much for watching. Take care, and I'll see you at the next one.